Hello everyone, thank you for joining us this morning and welcome to this educational presentation of this tool identifies strong trending markets in advance. Now I'd like to start out by sharing with you this chart here in the QQQs. This was just a few months ago in February. As we can see, the market had a nice run up. It had a nice upward trend, kind of backing and filling a slow upward trend, but at this point we seem to be hitting some so-called resistance. Maybe it's the institutions, maybe the oscillators are overbought, but this is where it runs into some trouble. So most likely you would say, you know what, I better hold back and wait until some type of breakout, or maybe see if there's going to be a pullback, and then I'll look to perhaps go along the QQQs or use them as a trend directional tool for the NASDAQ. But with what I'm going to be sharing with you today, just by looking at these two bars and the tool I'm going to be introducing, you would have known that an uptrend had a high probability of taking place. And as you can see later on, it was a very strong move to the upside. Now this can work to the downside as well. As we see this chart in DVM, someone looking at this would say, well, it's been going down, obviously, in a strong downward move, but look what we have here. Some support, this is a double bottom, and in all actuality, we have a bullish engulfing pattern, and the chat room I go to loves this stock, so this is some type of bottom here. And if we look at a short-term downward trend, look, we've broken out, and this is actually a breakout here. So you decide to buy this stock, okay? And for the very first couple of days, you're doing pretty well. You think that, well, this is actually a good purchase. It's probably going to go way up to make those old highs. But with the tool I'm going to be sharing with you today, on these two bars alone, you would have seen that there was a high probability for a downtrend to take place, and that this was just an aberration, a bounce, and that you should use this to get out or use this to look for shorting opportunities, because the market really took off to the downside after that. You're going to see today how simple it is to find these strong trending moves and these fast, really fast directional moves in the market, any time frame, by using our platform. This is the PTS Primo charting platform. This is the educational platform that identifies strong trending markets. Everything is one click away, and we specifically designed it to be really extremely simple. So this is going to be a great presentation today. Welcome once again. My name is Primo. I am the president and founder of Specialist Trading. And 10 years ago, I teamed up with Pro Trader Strategies with one goal in mind, and that was simply to educate traders. And we're happy to say that we have students in over 115 countries around the world and in virtually every state in the United States. Students that are learning our techniques and our strategies and our methods that have sustained me for going on 42 years now, because I've been trading for 42 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and out of those years, I was a specialist. So that's where we get the name Specialist Trading. Now, if you're not familiar with what a specialist does, it doesn't mean you're any more special than anyone else. It just means that you specialized in making markets in roughly about 50 or 60 stocks. So let's say you wanted to buy, let's say Waste Management was one of the stocks that I made a market in. Okay, you would call your broker in those days. You call your broker, and your broker in turn would contact the floor broker, who in turn would walk up to the person who made a market in that, who specialized in that. Okay, that was the specialist. That's what I did. So you either bought or sold, making a market in about 50 or 60 stocks. Now, I did that during the crash of 1987 and the bull market that followed. So in my 42 years of trading, I have seen and traded just about everything you can imagine. If there's some new system out today that no one's ever heard of, or some new indicator that you think is amazing, it's probably been around before. They've just renamed it or rebranded it. Any environment you can think of, straight up, straight down markets, sideways markets, I've traded through. So in my 42 years experience in trading, I know what works and I know what doesn't work. So why waste your time and money trying to figure it out and trying to search for that holy grail when there is actually a holy grail? It's called educating yourself. And this is what we provide you with: strong fundamental education that has stood the test of time. So I'm going to share with you some education today and show you how to find these strong directional trends. But before we begin, as always, we are first required to show you this, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this specific tool, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also, please remember that all examples are strictly for educational purposes only. So once again, we are required by law to show you our disclaimer. As you're taking a brief moment to view it, I would also like to take this time to invite each and every one of you to follow us on Twitter. Oops, I left out the slide there. But you can follow us. Our handle is at SPCLSTG, abbreviation for Specialist Trading. Lots of great free information, lots of educational information, and little signals that have been generated along the way to bits of wisdom, financial wisdom I've accumulated. So lots of great free information. Feel free to follow us on Twitter. Now, once again, we are first and foremost an educational company, as I stated in the opening statements. So that's what differentiates us from other webinars you may have attended, in that our only goal is simply to educate you. We don't promise to have some tool or some system that never loses or generates tremendous statistics each year. We don't promise to tell you what market to trade or what time frame, what the perfect time frame is. We don't believe in that, because in our concept or philosophy of trading, your mentor should never be trading for you. He should be teaching you how to trade, but then stand out of the way and let you make your decisions. That's how you become a consistent trader. When I was first trading 42 years ago, when I first started, I went through the same struggles, the same disappointments that many of you possibly are going through right now. So I know what it's like. It's tremendously disappointing and frustrating, because you're spending a lot of time, and most especially money, on things that really don't work. I was lucky enough to have some mentors. These were traders on the floor who saw how frustrated I was and steered me in the right direction. And that's what the specialist edge is. It's getting sound fundamental education and then making your own decisions, not relying on someone in a chat room or some guy on TV or some earnings report, but relying on the chart in front of you. So this is what the basic benchmark of our philosophy is. We want you to be in charge of your own trading destiny. Okay? Now, since this is going to be conducted like a class, I have a lot of great information to share with you. I want to take your questions, but I don't want to stop at every slide if you have a question, because we'll be here far too long. So if you have a question, please, I ask that you wait till the end. If you're new to my presentations, I like to take the questions at the end. The only question I will answer is this being recorded? Yes, it is. So if you want to watch this over again, we will send each and every one of you a link to this recording, okay? So once again, we have a good crowd here today. If you have a question, please write it down and try to remember it, and I promise I'll get to it at the very end. Okay, so we've got all that out of the way. Let's begin today's presentation. We're going to be talking about a tool, but what exactly is this tool that identifies strong trending markets in advance? I mean, for all intents and purposes, I mean, is this a predictive tool? Does it predict how high or how low something will go? Is it telling you the strength of a trend? No, it's not a predictive tool. It is simply a translator. You've heard me speak about this before. It's a tool I've been using for 4 decades now that translates what the market wants to do on a tick-by-tick basis. This tool is the PET-D. When I first started trading on the floor, my mentors, once they saw that I was starting to progress and learn what they were teaching me, they introduced me to this, and we used to, at the time, call it the formula, because it was a certain formula that you had to calculate on your own. It was very cumbersome. It wasn't difficult, but it was something you had to always stay on top of. But with the aid of high-speed computers and with the computer programmers, we have taken all the work out of this algorithm, and we've made it a proprietary color bar tool, so that all you have to do is look at the color. So there are literally, I would say, dozens, if not hundreds, of ways to use the PET-D, anywhere from a signal confirmation tool to a stop placement tool to an exit tool. You hear me talk about this in various webinars I've given in the past. Here is a new way, and we're going to be using the second version of the PET-D, because we provide you with 2 versions, the standard, or sometimes called the fast PET-D version, and that's used on about 75 to 80% of all of our methods and techniques. We use the slow version simply for keeping or staying in a nice established trade at a longer time frame. So in other words, we can be in the trade much longer if you're the type of trader that likes to hold on to positions. For example, let's look at this chart right here. MO. Obviously, we had a really strong move to the downside, but as we're going lower, we have these bounces where we bounce up for a while, and then we go lower, and then we bounce up again. Now, on these bounces, this is where traders get caught, and they say, well, I think we've bottomed out. Perhaps they're looking at some overbought, oversold oscillator, and they're saying, well, it's not confirming, or maybe they're looking at the institutions and saying we've bottomed out, and it'll bounce for a little bit and then presume to go lower, okay? And then just when they've given up and saying, well, okay, there's no bottom in sight, that's when it goes back up. And then as it goes up, it kind of stalls a little bit. It'll go up and then go back down lower. Here's how the slow version helps you. Remember, the PET-D slow is simply a color bar algorithm, but it will keep you in these trends a lot longer as opposed to the fast version, which sometimes may whipsaw you out. As we apply the slow version, we see that even when we had these bounces, the PET-D colored the bars red, which is saying that you're in a downtrend. Even when we bounced up for a good week or two, it colored it red. And then when we finally changed trend, even when we were going sideways and looking as if we may roll over, the bars continue to be green. And even when we started to sell off a couple of days here with some strong sell-offs, they remained green. So see, there isn't the whipsaw or back and forth of changing colors that you see sometimes with the PET-D fast version. So we're going to be using the slow version for this particular technique that I'm going to be sharing with you today. And you see how well this can really work with establishing these long trending moves. Okay, so here's how to identify a strong trending uptrend. All right. What you want to do is, as we look at the QQQs again, once again, we felt as if, well, maybe we're topping out, but there was an actual uptrend set up right here, and then the market took off very strong to the upside. How could we have found that out with the PET-D? Well, this is how simple it is. You simply apply the PET-D slow version, and what you do on our platform is click on PET-D slow, and then it automatically changes the colors. So here is the technique. It's so simple. You want to see a series of green bars followed by one red bar only, and then immediately followed by one green bar. So you have a series of green, one red, and then back to one green. This is telling you that that was just an aberration, that was just a short-term sell-off. We're going most likely back into a trend, and this is going to be a stronger move than the original move. And as you can see, it really did take off after that. Now, the same concept works to the downside for a strong trending downward move. Okay? Remember, we looked at DVN. It had a very strong downward move here. And then a bounce. This is where everyone said, that's it, we're going higher. Look at that gap opening. All the institutions, everyone's buying, so you want to be in there as well. And then this is where we signaled a downtrend in opposition to what everyone was thinking. And as you can see, that was the correct move. So how could we have found out in advance? We apply the PET-D slow. We click on the PET-D slow. It automatically colors the bars. And you can see here, sustained red bars except for this one green bar, and then followed by a red bar. So remember, it's just an aberration in the slow trend, and we're getting right back in to kicking in with a very strong downward move. So this is all you need to look for. Now, first of all, I want to mention, this is not a strategy. It's not something that say, oh, God, Steve, this is great. So I sell on the first red bar and I buy on the first green bar. I mean, you can do that if you want to, but you have to still apply, stop placement, exit placement, money management. All this is doing is just signaling high probabilities for a strong uptrend, or as you see here in front of you, high probabilities for a strong downtrend. Once you see that in place, that is a great clue that you're going in a certain direction. Then you can apply virtually any strategy or any technique to that direction. It doesn't have to be one of mine. It can be one of yours, okay? But either way, you will have a higher probability because you are in sync now with a strong trending move in a specific direction. All right, so let's look at some recent technique examples, and you'll see how, we're not cherry picking something that happened 3 years ago, the way you see in some other webinars. We're showing you things that happened within the last month, even within the last week or so, okay? All right, let's look at BBY. This was in the beginning of the year. As you can see, we were headed lower. It looks like we're starting to bounce upward, but what do we have here? This was a signal that a downtrend, a strong downtrend, was about to take place. And why did we say that? Well, if you apply the PET-D, you see here, once again, you have a series of red bars, followed by one green bar, and then another red bar. That's your signal. Now, I don't care what the overbought, oversold tools say. I don't care what the earnings say. I don't care what some institutions or some trading guru says. This is the market, what you're trading. Wouldn't you rather take your cue from the market as opposed to someone on TV? Because the market's telling you it wants to go lower. Remember, the PET-D is a translator. It's not a predictive tool. It's just translating what the market wants to do at any given moment. So why not learn to listen to the market instead of some guy in a chat room? So the market was telling us right here in December that it wanted to go lower. And as I stated, usually these are very strong trending moves. And as you can see, there was a quick 14-point sell-off in BBY that lasted just a couple of weeks. Don't you think you could have taken advantage of that if you wanted to apply some technique to that? Now, as the market shifted and started to bounce and started to change trends, look what happens. The bars start to turn green. And we don't just have one green followed by a red. We have a lot of green. So this is a series of green now. So now it's telling us we have to change direction. The market is telling us it wants to go in a different direction now. Our job is just simply to follow the market. We're not trying to predict anything. We're not trying to say what the earnings or how the company's going to do. We don't really care. All we're trying to do is figure out what the market wants to do through this translation tool and then jump on board. Trading does not have to be any more difficult than that. So the market is telling us, once we have a series of green bars, that it wants to go higher. Great. So we look for the first red bar followed by a green bar, and that is our setup that a strong uptrend is most likely going to happen very soon. There's a high probability for that. And as you can see, looking right after that, what happened? We had a quick 11-point gain. You see, for the next week, we kind of went up slowly, but then there was a huge bounce. Obviously, some news or something came out that caused that to gap up strongly, or some event. Did we have any idea what that was? No, because fundamental news is not a requirement of this. So how did we know? The market told us weeks in advance that it wanted to go higher and sharply higher. If we look at EBS here, what do we see? We've applied the slow pet D, and we have a long series of red bars, okay? Here's our first green bar. Now, if we had a number of 2, 3, 5 green bars, then all bets are off. This technique is not applicable. But we only had one green bar followed by a red bar. So that's your setup for a strong move to the downside. You can take advantage of that by applying any method. Sure, if you wanted to use this as a trading tool, you could simply sell it to market. But remember, there's no statistics, or there's no technique for saying this is an actual strategy. This is just telling you that the market really wants to move strongly in a certain direction. And right in here, it's telling you it wants to move strongly to the downside. And look what happened in the next week or two. 10 quick points to the downside. How about Tiffany? Okay, we have a series of green bars. So the market is telling us it wants to go higher. We have one red bar. So where most people would say, okay, well, wow, I guess that's time to sell. We wait for the next bar, which is a green bar. Remember, we're using the PET D slow. If we were using PET D fast, there may be a series of green, red, but with the PET D slow, we don't have that whipsaw feel we have in a lot of rangy markets as we may have had here. We only have one red bar followed by a green bar. So the market is telling us that this was an aberration, a quick sell-off. Now it wants to resume its trend, and most likely there's a high probability that the trend is going to be very strong to the upside. All right, so that's our uptrend setup. You can start to look for buying setups, start to look for a strategy or a method to get you in, and that would have been a good idea because the stock was up 15 points coming into the end of March last month. About Halliburton, once again, the same thing to the downside, a series of red bars, followed by one green, and then immediately followed by one red. Where someone would have said, well, Steve, this is a bottom here. There's a strong confirmation from the institutions and the volume saying that this bottomed out. It's, all the oscillators are oversold, and the trading room I go to on a daily basis loves this stock. So I should be buying it, right? Because the earnings are going to come out. They're going to be estimated to be very strong. Once again, all of my justification for buying this was based on an outside source telling me what to do, which is why, in my opinion, 80 to 85% of all traders fail, because you are letting someone or something else trade for you. You're letting someone make the decision for you. It could be an earnings report. It could be an oscillator. It could be some guy on TV. It could be some guy in a webinar. That's why we don't have chat rooms at Pro Trader Strategies or Specialist Trading, because that would be doing you a disservice, because we would automatically be taking you out of the game. We'd be telling you what to buy or sell or do what I'm doing. And no two traders should ever trade alike. Our job as traders is really simple. It's twofold. The first thing is to find out and discover what the market wants to do. And then the second thing is just to jump on board, to go in that direction. And that's it. There's nothing else that you need to do to overcomplicate. So what's the market telling us? The first requirement, it's telling us it wants to go lower. So our job is simply to jump on board to the downside, not to try and pick a bottom, not to worry about earnings or what's going on economically, but simply to sell this because the stock went down 11 points in the next month or so. And if you missed that, guess what? It gave you even another chance to get in for a quick 5 or 6 points. That was to the downside. What about Apple? This just happened about 3 weeks ago. As we see here, a series of green bars, okay? But it looks like it's rolling over, okay? Maybe this high was not confirmed, okay, because we just made a new high and now it's starting to roll over. Maybe you think it's going to come all the way back down here because what somebody said on TV. But why not just listen to the market? Using this technique, it's giving you an uptrend signal, all right? This was on the second week of March or so, 23 points after that, coming into the last week in April. I should say March. Here's an example of a great shorting opportunity in Win. Now, this was in last year, coming into October. As you can see here, we don't have a lot of selling opportunity because the market's been going up. So I had to kind of go back into the past to find some selling opportunities. But as you can see here, this is the definition of an uptrend. You have a high followed by a low and then a higher high. And so most people would say, well, Steve, I'm not going to short this. This can't be a downtrend because we're making higher highs and most likely higher lows. This low is higher than the other one. And conventional wisdom, what I've always been taught, that $10,000 course I took says that this is a short-term uptrend, so you want to look to buy, right? No. Trust me, that's the way I used to trade some 42 years ago. It didn't work then. There was no consistency in it until I really learned how to listen to what the market was telling me. And the market was telling me, using the slow pet D, that it wants to go lower. This is the beginning and the high probability for a sharp downward move. And as you can see, 45 points coming into the end of the year, okay? And you could have picked any one of these areas to get short, to buy puts, anything you want to. Remember, you do not have to trade one of my strategies. You could use anything that you're currently using, but once you know the direction, trading is so much more simple to get in sync with the market because you are going down the river with the current at your back instead of trying to swim upstream. Look at Facebook, okay? This was in January coming into February, a series of green bars. Looks like we're having trouble, kind of up, down. We're in a range market. We have one red followed by one green. That is your signal that a strong upward trend may be taking place. And look what happened the very next day. Gapped up 22 points to the upside. You could have got long at the close of that day if you wanted to, if you had some method or technique that told you to get long and had a quick 22-point gain in a week. Now, we can apply this to other time frames. Let's say you want to use this for your long-term investing or swing trading, okay? Here is a weekly chart of GE. Now, the same process can be applied. As we see, we have a series of red bars, one green bar, then another red bar, straight down. It doesn't mean that you missed it because it gave you another chance here and another chance here to sell, or if you were unlucky enough to be holding this position, you could have used these as exit points, okay? Let's say you were long GE and now you see that you're not really doing well and you saw this pattern. Well, if the market is telling you it wants to go down, do you want to hold on to a position? No, you want to get out. And, you know, if you're aggressive enough, you want to short, situations like this. But you would have saved yourself 20 points if you used that to get out of a losing position. That was a weekly chart. Here's a monthly chart of Fizz, F-I-Z-Z. Now we have the same pattern, even on monthly bars. So if you're a long-term investor or you're an IRA account or a long-term investing account, you can still use this. As we see here, we have a series of green bars, followed by one red bar and then one green bar. Now, these bars all represent a month. Now, not much happened after that, but that's okay. If you're investing, you're not trading, you're not getting in and out, you're holding for the long term. So not much happened after this one, and then you saw another series of the exact same technique appearing later on. So this would have given you more confidence to hold on to the position. Perhaps you wanted to purchase more shares, and that would have been a great idea because coming into 2 more years later, the stock was up 112 points. Okay? So we can be looking at daily charts, we can be looking at weekly charts, we can look at monthly charts. It makes no difference. This technique can be applied to all of those. Now, we've been looking at stocks. Let's look at some other market examples because I know we have a lot of traders who don't just trade stocks or who don't just trade daily bars. they like to trade other markets. So just to show you how this tool is so easy to transfer onto other markets, let's start out with an hourly chart of the emini. Now this just happened in March, just last week actually, on the 29th. What do we have here on this hourly chart? The same exact thing, a series of green bars followed by one red bar and a green bar. Now, once again, we had a high right here, and then we broke out and immediately went lower. Someone could say, well, gosh, this is a fake out breakout. I don't want to get long the markets. We've been going up far too long. This is getting kind of scary. It's due for a real strong sell-off. Where in all actuality, what is the market telling you? The market's telling you it wants to go higher on an hourly time frame. So it would have been wise if you were long to stay long or to figure out some type of structure to get long, because in the next couple of days, it was up 30 points, which transferred onto potentially $1,500 per contract. Now, we're not saying you would have made 30 points. It's up to you. Remember, we're not here to tell you where to get in or where to get out. We provide you with information so that you can decide on your own. Some of our students like to take a quick point and say, thank you, I'm out, I'm going to move on to the next setup. Where others like to stay with one market and say, I'm just going to use this one and hold on for as long as possible. Well, be that as it may, we still provide you with different exit points, different entry points, different stop placement on all of our strategies. Here's a 10-minute chart of the emini. Now, this was going back a couple of weeks ago to the last week in March. Now, the same rings true with this technique, except to the downside now. On a 10-minute chart, we have a series of red bars, all right? Someone would say, well, gosh, this is great support here. Look at the support. We're really holding really well. This is telling me that we should be getting long. I mean, I took that emini course, and that's a great sign that I want to buy around here. Well, we have one green bar and one red bar. So forget about what you learned in that $5,000 emini course. What's the market telling you? The market tells you it wants to go lower. So remember, our job as a trader is twofold. The first thing is to find out what the market wants to do, to listen to the market. And someone would say, well, Steve, I've never been taught how to listen to the market. I was taught to listen to some guy in a chat room. I was always taught to listen to the earnings reports or economic news. Well, that's what we provide at Specialist Trading and Pro Trader Strategies. We teach you how to listen to the market. And the best way I know how to do it is by using the PET D, because it translates what the market wants to do on a tick-by-tick basis. So right here, the market is telling you, not me, not some guy on TV, the market is telling you it wants to go lower. Why not jump on board and come with me? So if you jump on board, you don't want to think about buying. And look what happened. In the next day, or I should say the next 2 or 3 hours, this is a 10-minute chart, it was down 40 points. So potentially you could have captured 40 points to the downside. That's $2,000 per contract. Okay? And if you missed that, once again, there was another chance to do it right here. Okay? Now let's look at currency pairs. We know we have some forex traders out there. Forex traders like to trade the 4-hour chart. Here's a 4-hour chart of the euro yen. Okay, this was in February, coming into March, just about a month or so ago. Same exact concept. We have a series of green bars. It looks like the market is going lower here. We have one red bar followed by one green bar, where everyone's thinking, well, we're in a downtrend, Steve. We can't buy this. Well, listen, we're not trying to pick tops and bottoms. We're not saying this is a strategy or a system. This is just simply the market giving you a signal as to what it wants to do. And right here, it was giving us a strong signal that the euro yen on a 4-hour chart wanted to go higher. And as you can see, it went up 160 pips. That's not points, that's pips, in just about 2 or 3 days. Okay? So, before we go into question and answer, let me share with you some important points to remember about this simple but very powerful technique. Please remember, this is not a trading strategy. I know a lot of you will say, gosh, this is amazing, so I'm going to just wait for one red and then one green. I'm just going to buy at the market. Sure, you can do that if you want, but there are better ways to enter, better ways to exit, better ways to place your stop. And these are not included because we didn't talk at all about advanced entry signals. You know, we provide our students in our courses with at least 6 different ways to enter. We didn't talk about stop placement. All right, we have 6 or 7 ways to place a stop. You can track the trade if you want to. You can keep raising your stop or keep your stop where it is and then move to break even. There's just a number of ways to apply. Remember, you're in charge. And we didn't talk about exiting. As I said, some students like to take a quick exit and get out and say thank you and take my profit and look for the next setup. Other traders like to stay in for as long as possible. Is one trading style better than the other? Absolutely not. The only thing that's wrong is when you try to copy or mimic another trader. That's what's wrong. Trust me. If that works so well, if that worked by just copying or going to a trading room or getting a signal service, then why do 85% of all traders fail? Because that doesn't work. What works is being provided with knowledge and information and then making your own decision. If you want to get out after 1 point gain, that's fine. If you want to potentially capture 40 points, that's fine. But the point is, you have to be in charge of your trading. Not us, not someone on TV, not some earnings report, but you. And then we didn't talk about money management, okay? Because we know sometimes this may not work. We know that sometimes there may be a small loss where it works for a couple of days and then quickly reverses. So you have to have some money management. These are all important pieces of the puzzle of a trading strategy. And today's webinar was not about a trading strategy, but a great trending setup. So before we close and you ask me questions, let me ask you one. We are already 1 quarter into 2019, okay? Can you believe it? We're already 1 quarter in. Do you think this trend tool can help your trading for the remainder of the year? Now, most likely, you're like the majority of all traders. You're still struggling. You're still having a difficult time getting on board. That's okay. I know exactly what that's like. But you can always change things around. Sometimes in the blink of an eye. We're not promising you, but we're trying to educate you so that you can make the turnaround. And we really think that we have the tools and the education and the expertise to help you turn things around. So it doesn't matter if you're already 1 quarter in. You don't want to be here a year from today, struggling and disappointed and frustrated, spending thousands, tens of thousands of dollars on techniques and systems that show no consistency. Well, we have a great offer for you today, a great attendee discount just for taking the time out of your Wednesday afternoon to join us. This is our roadmap for any market special. We're going to offer you the PET-D, which stands for the Primo Early Trend Detector. Remember, when I first was introduced to this tool some 4 decades ago, we called it the formula, but we thought we'd give it a better name than that because we've taken all the work out of it for you. You don't have to figure out the formula. You don't have to sit in front of your computer and figure this out on every bar. We automatically do it for you by making this a roadmap with a color bar algorithm, okay? Now, we're going to also supply in this course 2 continuation trading techniques along with 2 other pullback trading techniques, all right? Included is a trailing stop technique. Remember, you can apply this to virtually any market, any strategy, and any time frame. One thing we didn't mention here is that you're going to get both of the versions of the PET-D. You're going to get the PET-D Fast, which is something that I talk about a lot in my other webinars, which we use for about 3/4 of all our strategies. And we're also going to talk about the PET-D Slow. We're going to provide that for you as well. And this technique uses the PET-D Slow. But we also have an extra bonus because we don't want to make it difficult for you. Remember, trading should be simple. Trading should be easy. And the easiest way we've constructed it for you is by devising our platform. We developed our platform with Pro Trader Strategies, and everything is 1 click away. So we're going to offer you our PTS Primo Charting platform. This is the educational portal that you've been searching for. Why? Because it educates you, it teaches you how to trade, and it does it simply. It's an educational tool with all of my 42 years of experience in trading techniques all in one place. Everything is easily accessible, usually just 1 click away. So let me share with you what you get, because you're just not going to get the PET-D. We're going to obviously give you the 1-click PET-D access, but you'll also get our our enhanced buy sell line. You've heard me talk about that before in other webinars, where this is our proprietary tool that gives you the overall trend, and we have 4 different proprietary ways to check it out. We're also going to give you a short-term pattern recognition tool. Simply by identifying this short-term pattern on any time frame, you'll be able to see what the short-term time frame is and the short-term direction. One of the best things is that we provide you with a signal scanner. So let's say you love this technique I shared with you today, how the PET-D Slow can help you, and you like to look over the entire S&P 500 every night, or maybe the NASDAQ 100 or the Dow. Well, you don't have to look through a series of charts the way I did when I was first started trading, and it would take me 2 or 3 hours every night. All you have to do is click on the scanner, and it will automatically scan for these setups. You'll be able to see the PET-D setups and where they are for that next day, okay? We've included 90 of the most prominent technical indicators. Now, we realize that not everyone is a technician, and even though fundamental news is not required in our methods, we know that a lot of people like to use that. Remember, we're not here to tell you how to trade or how not to trade. We're simply here to educate you. If you feel you must look at news and it really helps you, well, guess what? We have free Bloomberg TV on the platform. We have a media icon where all you have to do is click that on and a screen comes up of live Bloomberg TV. So if you want to look at earnings reports, if you want to look at economic reports, it's right there live as it's happening. And lastly, this all comes with personalized tech support. So if for any reason there's an issue where you can't load up a chart, or you can't get the Bloomberg TV, don't worry, we'll be there in a matter of moments to resolve any and all of your issues. Now, here's the offer we have for you today. We're going to include the PTS Primo charts. Today only, we're going to give you a full year absolutely free. Absolutely free. But you have to take advantage of this right away. This is a limited time offer. Now, usually this would cost you close to $2,000. We're throwing this in absolutely free. So you're going to have the one-click access of the PET-D fast and slow. You're going to get all those other tools and the scanner, everything I talked about earlier. So one last thing I didn't say in the that we're providing for you in this course is that you're getting free educational mentoring correspondence with yours truly. You're going to get my private email address. So if for any reason you want to ask me a question, you're not sure about some technique or the PET-D, you can contact me, send me an email, and I will be there and answer it right away to answer any of your questions. So this is also included. Someone who's been using this for over 4 decades will be able to instruct you and give you any type of mentoring correspondence along the way. This is truly our roadmap for any market. So let's break it down. All right, we have a great offer for you today. The PET-D course and application and the platform is $29.95, but we're also going to, so for a one-time payment, all you have to do is pay $29.95, but we're going to give you a great offer here as well. We have payment plans available, so all you have to do to get the same exact course and the 1 year of the platform is to put down a small payment plan of $497 and then just $97 a month. Either way, if you want to pay the one fee of $29.95 or you want to go with the payment plan of $497, we are going to waive the application fee for the first year. Okay, so you get the free first year application fee waived. So this is a great, great offer. I personally would suggest taking the payment plan. That way you don't have to come with the one lump sum and $97 a month. I mean, sometimes people using platforms pay $250, $300 for a platform. This is a lot less expensive, and you're getting the free year of our PTS Primo charting platform. This is a great offer, and trust me, a year from today, you will have wished you became a member of this course. You don't want to be here a year from today, April 3rd, 2020, and saying to yourself, gosh, you know, I'm still where I was a year ago. In fact, I'm worse off than I was a year ago. You don't want to do that. You want to be looking a year in advance and say, gosh, I'm so glad I took that course. I'm so glad I started to get some education about trading because I'm progressing at a much higher level and I'm going in the right direction. I feel happy about my trading. I look forward to trading every day, and I have a 2-step forward, 1-step back approach. I have a very consistent method, and I'm very happy with what I'm seeing being all the results I'm generating. This is where you want to be. And we really feel strongly that becoming a member of this course, it will help you tremendously. So here's how to take advantage of this. Contact Pros Trader Strategies. I designed and developed the platform with them, and they're in charge of all the discounts and the course structure. They would be happy to set up a payment plan with you. All you have to do is call them at 310-598-6677, and there's no obligation. They will answer any more questions about discounts or about tech support with the platform. Now, for more information, go to this link you see on the bottom here. This is the link that will take you to the sign-up page if you'd like. Now, that's not a live link, but if you go to the chat box on the far right-hand corner, we have just posted a live link that will take you there. So you don't have to copy and paste that on your screen. You can just simply click that on your chat box. But I would really suggest contacting Pro Trader Strategies. Most likely, it would be better to do it via phone. Remember, there's absolutely no obligation. They would be happy to answer questions you have, happy to tell you about anything that's included with that or what you're looking for, and happy to set up a payment plan with you, okay? I'm going to leave all this information up here, and as I promised, I'll take any questions that you may have. So just simply go to the question and answer box and type in your question, and I'll go over them right now. I see there are a few here. Let's see, does it have to be only one opposite color bar before the trend resume? Can it be 2 or 3? That's a good question, but remember, this is using the PET-D slow. There are dozens of ways in which to use it. That's a totally different way to use it. But this as I've seen and looked in the past, oftentimes, not 100%, but oftentimes will predict, well, I'm not going to say predict, but will foretell of a very strong move in that direction. Whereas if you wait for 2 or 3 green or red bars, the opposite ones, they're not going to be as strong. And plus, often that technique is used with the petit fast. So there are multitude of different ways. So I would suggest becoming a member of the petit course, and you can get all these different ways in which to apply it, okay? Let's see. People are asking, does this petit fast come with it? Yes, I think I answered that. You're going to get the petit fast, which, basically is just also called petit standard. And that's what we use in just about the majority of all our methods. Stop placement, entry, confirmation, exits. But the petit slow is not something that we use all that often. We mainly use it just to keep you in a trend for a long, long time if you're the type of trader that likes to stay in those long trends, as I showed you. But we've discovered this technique that really can, often foretell of a very strong moving direction. So this is what we're, trying to share with you. There are literally dozens, if not hundreds of ways in which to apply the petit. That's why we say it's really going to help you once you become a member of the course to find and discover all these ways. And I'll be there right alongside with you. I use the petit on a daily basis. I used it today. I had one quick trade this morning and made about $400, and I was out of the market. And it was basically based on the petit. So it's so easy to work with because we take all the work out of it for you. All you have to do is look for a green or a red bar. It's that simple, okay? Let's see. Jeffrey says, I know you were talking about buys and sells if you get a bump. If you are trading options or puts, do those bumps make you lose options or puts? Well, firstly, how you decide to trade is up to you. In other words, if you want to purchase the stock, sell the stock, if you want to purchase calls or puts, it's entirely up to you. What we always suggest is, since I'm not an option trader, I used to trade options a long time ago on the OEX. I don't think any of you remember what that was, but that was prior to the QQQs. And this was in the 70s and 80s. And option trading is difficult because there are other aspects involved, such as premiums and time decay. So what we're saying is that it's up to you how you want to do it. One of the best ways to answer that question is a requirement that we require in all of our techniques, and that's the paper trade. So let's say you wanted to buy a put or wanted to short or buy a call based on this technique. What we would suggest is for a certain amount of time, up to you, just see where you would have purchased it and see how this would have helped you. And that's how you find out if it's okay for trading the options or okay. Maybe you want to decide, well, this is much better technique if I purchase an out of the money call, or maybe it's a much better technique if I use a spread strategy. So that's what we always suggest to our option traders, okay? Pete is asking, what does petit stand for? Well, remember, the petit, when I was originally introduced to this by my mentors, was called the formula, because it's a specific formula that you have to calculate almost on a tick-by-tick basis. It's very, it's not difficult. It's just cumbersome. You have to always be on top of it. But since I developed this with Pro Trader Strategies, we decided to give it another name. We're not going to just say, well, it's the formula. So we just called it the Primo Early Trend Detector, because that's really what it does. It really is a great tool for defining what the early trend is. And in my 42 years of trading, I have not found a better tool for determining the trend, for keeping me in longer, for telling me a trend is about to start prior to other tools. I know there are lots of trending ways out there, and trust me, I've used just about each and every one of them. Nothing compares to the way the petit works. It's probably the best thing, out there, in my opinion. So that's why we're trying to educate you. The main thing is that the petit is not a predictive tool, and it's not a system or a strategy. It is simply a translator. It translates what the market wants to do. But think of it. Isn't that the best edge or the best tool you could have? If the market is telling you what it wants to do, then all you have to do is just go with it. Put some type of structure, some strategy, and that's it. It's that simple. It doesn't have to be complicated. It's my opinion that the reason why most traders fail is because we overcomplicate our trading. We think that we have to pick these bottoms and look at what the institutions are doing by some formula or the volume or see what some guy, some master guru was telling us. Trust me, I've been there. I did all that, and there was no consistency. I lost money trading those things, the same exact things 40 years ago. It wasn't until I started learning how to listen to the market is when I started to become consistent. Now, we're not here promising you that you're going to retire in 6 months or that you're going to become a millionaire. We don't believe in that. We're trying to just educate you so that you can be trading 20, 30, 40 years down the road. That's our goal. Our goal is not to tell you that you're going to be rich. We don't believe in that. No one knows because you're going to be in charge of your trading, not us. We provide you with a basic format and different options to take, different entries, different exits, different stop placements, but you have to decide how you want to do that. And that's how you become a consistent trader, okay? As we conclude, I just want to say thank you so much for attending today. I hope you got something out of this. I hope you can see how powerful this tool is, but how simple it is at the same time. Okay, it's so simple. One bar of an opposite color followed by the bar of the opposite color, and that's it. That's all you need to know. Now, remember, I'm not telling you to buy or sell based on that, but you can apply any strategy or any technique to this method, okay? Remember, if you have more questions concerning pricing, concerning the payment plans, there's absolutely no obligation. Contact Pro Trader Strategies. They would be happy to answer questions concerning discounts or pricing. They developed the platform with me. The platform makes everything so easy as well. They developed all that with me, so everything is one click away. There's absolutely no hard work on your part. We make trading simple for you. Contact them. They have trading consultants manning the phones right now, and they would be happy to work with you with any type of payment plan or discount, okay? As we conclude, we take one last look at our disclaimer. I just want to say thank you so much for attending today. I hope you learned something, and I wish you the best of luck trading, but mostly I look forward to all of you becoming students of mine in the Pet D course. Thank you so much. I'll see you next time. Bye-bye.